Hey everybody, Charles Toll back with an Aloha Friday, May 29th market update. Overall, considering all the information that came out this week, markets responded pretty well. We had core and headline inflation reports come out that came in at 3.3 and 3.9% respectively, which obviously is way above that 2% target that the Fed has had for several years now. The good news, though, was that the markets didn't overreact like they have in the past. We looked at this a year and a half, 2 years, 3 years ago, and we get a report like that, and rates would have spiked. Treasury bonds, mortgage-backed securities, all would have gone really in the wrong direction pretty quickly, and they didn't do that. And the biggest reason for it is because we do have some talk about a peace deal in Iran, and at least an extended ceasefire that would open the Strait of Hormuz and allow unrestricted oil to pass through. That's 20% of the world's oil supply. So that makes a huge difference on relieving some of the pressure, relieving some of the fears of inflation, relieving some of the costs that we're seeing, even regardless of some higher than desired inflation reports. So I think that that's about as well as can be expected. We're not going to be able to control any of this. So it's really important that we control what we can, have an educated conversation with all of our buyers, all of our sellers, and every market and every neighborhood and pocket is going to be really hyper-localized right now. Here in San Diego, we are seeing, let me get my numbers right, about 7,000 active listings right now for approximately 320,000 potential buyers who are renting right now and can afford to buy but aren't, whether that's because they're waiting for credit issues or job changes, or they're just waiting for rates to come down. That's not a lot of inventory for a lot of people who could buy. Los Angeles isn't much of a different story with big population. You just see the numbers skewed a little bit. There's only about 22,000 active listings in LA right now for about 1.2 million buyers who, again, are renting, who could afford to buy. This isn't taking into consideration people looking to move up, looking to downsize, looking to potentially just move into different homes in the LA or San Diego areas. So again, not a lot of inventory for what should be available, especially historically. And you compare that against a market like Phoenix, where right now they have about 22,000 active listings for about 400,000 buyers who could afford to buy but are still renting. That is more like the market conditions we were seeing in 2019. So that's a healthy market. That's a lot of homes available, a lot of potential buyers, but because people are still so locked into what we saw in 2020, 2021, where their homes were selling immediately, it's also leading all metro areas in price reductions. So about 31% of the homes are coming at a cut cost. And there's a lot of strategy behind that too. We have a lot of programs that can really help people sell their home without necessarily advertising a price reduction through seller paid subsidies. So we can help make these offers look more attractive. We can help motivate buyers by talking about these numbers. If you have any questions about the markets, as always, you know where to find me.